Yep, it happens. It happens to people every day, buyers and their agents every day. It happened to me when I was a newer agent, and I don't let it happen anymore. And what am I talking about? You find the house you love, you put a lot of emotion into it, some time and some money into it, and then you try to get financed, and you find out you are not qualified to buy that home for whatever reason. Obviously, it's not your intentions to go out there and waste time, but that's what you're doing when you're not getting pre-approved for a loan, for financing on your home. And what we're going to talk about in this video is how to avoid that, how to pick a great lender, how to make sure you go through the right steps and the right process, so stick around. Hi, I'm Dave DeSilva with Long Tab Realty here in Charlotte. I'm actually in Matthews today, just checking out a house for one of my clients. But in this video, we're going to talk to Liz.Thomas from Movement Mortgage. Throw a bunch of questions by her about the lending process, why we need a lender, why we get pre-approved, and some other questions that have come from some of you in the recent past. So here we go. Okay, so here we are today with me and then my favorite lender from Movement Mortgage, Liz.Thomas. You're welcome. And we're both smiling because this is the first time we've been on tape together, but we're going to bring you some good information. First of all, Liz, please introduce yourself, tell us what you do, and give us a little bit of background.
Sure. I'm Liz.Thomas. I'm with Movement Mortgage. I am celebrating my 30th year in the mortgage business. Yes, dating myself a little bit. I am actually the conduit between a real estate agent and the buyer. So if you are looking for a house and you have your favorite real estate agent and you want to buy a house and you don't have the money, you need somebody like me.
Okay, so let's get into the meat of the topic. Why get a pre-approval? Why do you need it? How do you do it? Give me some information on that.
Sure. There's actually several different kinds of pre-approvals. So if you have a person or a client that's wanting to get a mortgage, you have them getting a pre-qualification, meaning they've gone online, they filled out an application, and they're waiting to hear from someone. Or you have a pre-approval where they've actually spoken to a lender such as myself, they've actually filled out a formal application, we've pulled credit, we've reviewed that credit, reviewed pay stubs, bank statements, and then there's what's called a credit pre-approval where you actually go through all the formal steps and then you actually have an underwriter review those. So you know that you're actually pre-qualified, pre-approved to actually go buy a house. You do not want to start looking for a house, especially in this market, without getting a pre-approval letter.
Okay, so why not?
Yeah, if you are out with your real estate agent and you do not have a pre-approval letter from your favorite lender, and all of a sudden you draw up, to the perfect house, it's the house of your dreams, and your agent is sitting there at the kitchen table, you've looked at everything and you want to place an offer, and your agent says, great, can you qualify? And you have no idea. The danger that you have in writing that contract, or the agent writing that contract, is they put their money at risk, earnest money, due diligence, and their heart is broken if they can't buy the house that they want.
You're out there looking at houses at $450,000 because your client says, I guarantee you I can buy this house, I have lots of money in the bank and blah, blah, blah. And you find the house at $450, you go to your lender to get pre-approved, and they say you're approved for $350.
Right.
For all sorts of different reasons. And what could some of those reasons be where somebody who's got money in the bank or doesn't maybe have a lot of bills, why would they not be qualified for the greater priced home?
Right. Well, a lot of it right now is interest rates. If people are not thinking about that, where interest rates were back in January, we're sitting at 3 1/4. Yep. If you're looking at interest rates today and we're sitting at 7%, 7 1/8, that's a difference of $250,000 on a $500,000 house. You don't want to assume that you can qualify for a house.
Okay, so what do you need from me as the buyer to start along that path?
Exactly. If you call me up on the phone and you say, hey, I make $100,000, can you tell me what I supposedly can qualify for? Sure, a loan officer can take your income and calculate what your monthly payment would be based on your income, but we don't know what your credit score is because that plays a part in it. We don't know truly what your income is because you could make $100,000 or tell me you're making $100,000 a year, and oh, by the way, you're self-employed and you write off $84,000, you don't make $100,000.
We've had that happen.
We've had that happen
in the past before.
Yes.
Okay, so from an agent's perspective, I think of sometimes the unethical step of showing a client a home when I'm not aware that they're qualified for a home. We shouldn't be out there showing $600,000, $700,000 or $80,000 homes to somebody that we don't know is qualified.
Right.
So, that's one good reason to get that pre-approval letter. The next thing from an agent, especially in this market, is if you and you're my buyer, we go out there and put an offer on a home, and it gets accepted, or before it gets accepted, the listing agent most likely will ask me for a pre-approval letter.
Yeah.
So they're not wasting their time with someone who's not qualified.
Right.
Do you run across that a bunch?
Absolutely, we do. And oftentimes, if we have a potential contract that's coming in, before those listing agents are actually accepting those contracts, they're picking up the phone and they're calling the lender and finding out, okay, is this a legitimate letter? You issued this letter for Mr. and Mrs. Smith. They're trying to buy a $450,000 house.
So quick question about credit.
Okay.
Well, what if I go to 3 different banks and they run credit? Is that going to hurt my FICO score, all that good stuff?
That's a great question, and we get that a lot. It's called, you have what's called a 14-day look back. You can go to at least 3 lenders, have all 3 lenders look at your credit within that 14-day period. All the lenders are going to be looking at the same report with the same scores. It's where you get yourself in trouble is if you go, I'm going to talk to this lender this month, I'm going to talk to another lender next month, and another lender, and all of a sudden you've got 6 or 7 lenders drawn out over a 4-month period. Your credit's going to suffer. You do not want to do that.
So
14 days.
So number one, take the advice of your realtor, who's been doing this for a while, and they have favorite lenders for a reason.
Yes.
And it's not because they're buddies, but because they've been doing a good job together for their clients. Take your lenders or your realtor's advice, or if you've got a great lender from the past, go back and visit them. So don't just go pick one from the yellow pages. That's probably some pain you're going to get yourself into. Okay, before we go any further and talk about timelines to getting your pre-approval, we want to just ask quickly that you like this post, you subscribe to this channel, and you make some comments on what you would like to see in the future, and let us know if you're thinking of making Charlotte your next home. What kind of timeline would you recommend for a buyer?
If you've got a client that's serious, they've actually reached out to you, they're going to then come to me, do their application. They want to be looking a minimum of 6 months before they actually are ready to purchase. And the reason I say that to people is there may be things on the customer's credit that they don't know that they're there. There may be a collection item. There may be a late payment. There may
things
be
they can maybe fix up a little bit.
Exactly.
Or maybe not.
Exactly. So you go to the mortgage person, myself, or your favorite mortgage person, whoever that may be, and the mortgage person is going to ask you for verification of what you're telling him. Self-employed, you better be able to come up with your tax returns. If you are
for what time?
2 years.
2 years.
2 years.
Okay.
2 years self-employed. If you're a W-2 employee, we want 2 years of your W-2s. We want 30 days worth of pay stubs.
How about if you just move here from Oklahoma or New Hampshire, and you've got a guaranteed job?
Absolutely.
Somebody says, "Hey, work for me. Here's my contract."
Absolutely, and there's nothing wrong with that. If you're moving here from New Hampshire, your home state, if we look at that and you've got an offer letter and you're going to be working for CMC, that's great. We can actually do that.
So I just moved here from New Hampshire. I've got a realtor. He says, "Get with Liz, or I'm going to have Liz call you." What do we want to talk about?
Yeah, absolutely. When we actually talk with a buyer, it's more than just name, address, social security number, birth date, who are you working for. When we're talking to a buyer, we need to also know what the client's payment tolerance is. You may not want to, in your financial budget, you may not want to make a $3,500 payment. Well, that's something that the lender needs to know, because if the lender is reviewing your application and looking at your income and your assets, and they say, oh, well, according to the paper, they can afford this, you may not want to make that payment.
So jump off script a little bit here. You said program a couple times. How about programs for specific jobs? I know VA's obvious, military.
Right.
How about police, fire, medics, doctors, nurses, garbage men, whatever?
Yeah, if people in those service industries, if they need down payment assistance, we've got some great programs for those. If you are a USDA and you need 100% financing and you're looking at something a little rural and you don't mind being out a little rural, we got VA loans for our veterans. Thank you for your service day. So there's all sorts of different programs. You need to have a lender that has the ability to have all of those programs at their fingertips.
Okay, so this is a huge financial commitment for most people.
Yes.
There's got to be a bunch of pitfalls. What just kills the transaction?
Once you start the process of actually looking at houses and you've talked to a lender and that lender has pulled credit, you do not want anybody else to pull credit unless you speak to your lender. Don't go to the car dealership and have them trick you into the fact of, oh, you can buy this car, your lender's never going to know. We actually do a credit monitoring. We know what goes on with your credit. And if you have someone pull credit, it shows up as an inquiry. The next thing it's knows, you're going to get a call from me or your favorite lender that says, You had ABC Lending pull your credit on Saturday the 25th. What did you do? You bought a boat. I'm going to tell you to stop, because what happens is we've had a client that literally had to stop the purchase of his house because he bought the boat.
And I know you have that conversation
Yes.
with clients that we're working with,
Yes.
because I do mention it to them. I say, hey, don't go buy anything. Don't buy a cell phone. Don't do anything.
Don't do anything that pulls credit.
And
Absolutely
they say, yeah, Liz told me that already. So we make this sound like, oh my God, no one's ever going to buy a house.
No.
But people are buying houses all the time. There's a huge demand for homes right
Yes.
now. So people are coming in to see you and talk to you all the time.
Yes.
It's, we're just talking about the frightful things,
Right.
and the process.
The don'ts, yeah.
Yeah, the don'ts.
Mm-hmm.
So what are I think we might have talked about this already, but what are some of the do's to make sure they're revealing to you, just so you know? Anything like that you can think of?
Well, the one thing I want to tell people too is when you're having these conversations with your lender and you say, hey, I'm leaving my rental place and I'm paying $1,500 a month, and I think in my conversation I told you I could pay $2,500 a month. I, for the next 6 months, want you to open a savings account and put that extra $1,000 in the savings account. Because if you can put that money in a savings account, you got money for down payment, you got money for incidentals, surveys, home inspections, appraisals, but you also can figure out, okay, 6 months, okay, we can pay that $2,500. We want customers to be homeowners for life. There are some great programs that are, and there's nothing like being a homeowner.
It's great seeing somebody get their first house, or even seeing somebody move into the next house, as they're building a family.
The babies
and
are
all.
coming and they need the nurseries. There's nothing like it. I wouldn't be in this business 30 years if I didn't love what I did.
That's like the clients who actually just left here.
Mm-hmm. Yep.
Went from a small condo with, I think they had that one child at the time, then we put them into a much larger home, more fit for them. Mother-in-law's there, another baby. It was so cool seeing those people. It makes you kind of feel good about what you're doing.
It is, and it's the neatest thing is when you see the client at the grocery store. Oh, Liz, hey, we love our house. Thank you so much for helping us. Or the best referral is, a friend or a family or someone. Hey, call Liz, call Dave.
If you've liked what you've seen and heard, please consider pressing that like button, hit the subscribe button, make some comments. Let me know what you agree with, disagree with. Let me know what you'd like to hear. With that in mind, Liz, any last words, any last comments, any last thoughts?
Get with your lender early, get your stuff done, you know what your buying power is, and enjoy the time. You'll find that perfect house for you.
Last words. Thank you.
You're welcome.